Alright guys, welcome back to another series of videos by Geeked on managerial accounting. Today I'm going to be talking about chapter number 5, which is job order costing. Alright, so in this chapter there's not really a lot of explaining to do, and we're really going to skip to a question right away. Alright, so what is job order costing? It's like when you're accounting for all the costs that go into custom products that are made to order. So one very important thing to remember is that when you're accounting for job order costing specifically, it's going to be for different products that people order. So for example, somebody comes in and says, can you make a custom suit for me? So this custom suit has to fit this guy specifically, right? It has to be according to his needs. And then another person comes in, he's a bit taller, and then the suit has to be according to his needs as well, right? Because every person is different. So that is really what we're accounting for, the differences that go into every product. So we're really going to account for each product individually. So when it comes to accounting for any sort of costs, there are really three types of costs that we've discussed, right? So there's direct material, there's direct labor, and then there's manufacturing overhead. Direct material, we already know, like whatever material we put into any product, it's directly traceable, right? Because you already know how much, like beforehand, you know how much material goes into a suit. You can look at any suit and tell like how much fabric went into it, how many buttons were sewn on it, like stuff like that. You already know, it's traceable. Direct labor, again, is traceable because you can calculate how many direct labor hours went into any one suit, how much time your employee spent making that suit, so it's still traceable. The issue is manufacturing overhead. Now, how would you allocate your rent, your electricity bills, your depreciation? How would you allocate all of these to these suits? It's very difficult because, like, if you have rent, how are you going to divide it between like the number of suits that you made? It's a challenging task, right? And that is where job order costing comes in. Now, the techniques that I'm going to introduce to you, they're really to account for manufacturing overhead, and the main challenge in this chapter is going to be manufacturing overhead. All right, guys, so first off, I want to do a simple question so like you guys can have a brief overview of what you're looking at and what to expect. And then in my next video, we're going to jump into a full question. All right, guys, so let's get started with this one. John owns a packaging company. The company uses direct labor cost as a basis. So there you go. That is your first clue in the question. The company uses direct labor cost as a basis for applying manufacturing overhead costs to job. There you go. So what this question is saying is that manufacturing overhead, as I said, it's very difficult to allocate the costs, right? So in order to do that, what you do is get a predetermined overhead, manufacturing overhead rate. Once you find this rate, you apply it on a certain base activity. You'll understand more when I get into the question. Moving on, the company estimates its annual overhead to be 140,000 and it expects employees to work 20,000 hours at an average wage rate of 12. During the year, employees actually worked 18,000 at a wage rate of 12.25, and the actual amount spent on overhead was 150,000. All right, so we're going to start off with part A, which says complete the the predetermined overhead rate. All right, so that's what we're going to do. So the predetermined overhead rate is essentially predetermined MOH rate is essentially your expected manufacturing overhead, which is like over here, estimated annual overhead to be 140,000, right? So it is your, okay, first I'll write out what it is. So estimated manufacturing overhead divided by your base activity, which is also estimated. All right, guys? So in this case, you have an expected MOH of 140,000, and you expect your employees to work 20,000 hours. And in this case, the company uses direct labor cost as a basis for applying manufacturing overhead. So it's simply put, you just divide it by your expected MOH by the number of hours that you expect your employees to work. All right, so it's going to be 20,000. And then that comes out to, I should have had my calculator ready, just one moment. So 140,000 divided by 20,000 is $7. That right there, my friends, is your MOH rate. Now, how would you use this? We're going to get to that. So, moving on. How much overhead would be applied to jobs during the year? There you go. It's asking you the question in the next part. So, that's part B. So it's saying how much overhead would be applied to jobs during the year. So what happens in job order costing is that you come out with this sort of rate. You have an expected rate that, okay, you're going to incur $7 of MOH on every product that you produce, right? And then when you actually produce products, like in actual units, you apply the $7 to all of those units. So in this case, we're actually working 18,000 hours, right? And this $7 is per labor hours, right? So every 1 hour that your employees work, you're going to charge $7 of MOH to your products. It's just the way that this question is planned out, and it's just the way that this company allocates its MOH. You always need a base. So in this case, the base is your employee hours. All right, so since you actually worked 18,000 hours, this is what you're going to do. So you're going to take the 7 that you found here, that's your MOH rate, times your 18,000, which is the number of hours that your employees actually worked, right? So that comes out to 7 times 18,000, that's 126,000. So that, my friends, is your applied MOH. Okay, applied as in that is what that is the amount of MOH that you applied to the jobs that you completed. Another note, in order to explain applied better, I'm going to I'm going to move on to the next page. Okay, so imagine that you have a month, let's take March and April and May. Okay, guys? And May is when your year ends, all right? So 31st May is the end of your year. But the thing is that you completed products on this date. You completed products on sometime in April, but your year ends on 31st May. So you apply MOH. You apply MOH because you cannot really wait for the 31st of May to arrive to actually see what your actual MOH is, because the product that you made, it's been sold now, right? The customer came in, you gave it to him. You're not going to be like, no, I can't sell it to you because I haven't really calculated my actual MOH yet. So I have to wait until I calculate that. No, that's not how business works, right? So you come up with an estimate and you apply it to all the products that you sell. And at the end of the year, you reconciliate between your actual and your applied MOH. All right. So in order to do that, that is part C. By how much was overhead over applied or under applied for the year? All right. So there you go. In order to do that, you draw up a T account. So this is your MOH T account. Actually, that's a terrible one. I'm going to draw it again. This is your MOH T account, right? And now what you're going to do is, on the debit side, you always have the amount of actual MOH. So in this case, your actual MOH is 150,000. Remember that it's a rule of thumb that this side has your actual MOH and this side has your applied MOH. I'm going to get into that when we do the journal entries in the next question. So on this side you have the applied, which is 126,000. Right, guys? This is applied. So which side is lower? Like, which side is smaller? This side is smaller, right? So since it has been, like, your actual is 150,000 and you applied less, you applied like 150,000 minus 126,000. You applied 24,000 less than what you actually, than your actual, right? So is it over applied or under applied? Well, it's under applied, right? And you have to, in order to balance it out, you want to credit your MOH account by 24,000. So yes, in this case, your MOH was under applied for the year by 24,000. All right, guys, so that's just one very small question. Now we're going to move on to a more technical question in which I'm going to show you journal entries and why this is your actual side and this is your applied side. All right, guys, so stay tuned for the next video.